Welcome back to Investing Talk podcast. We're here to break down the complex world of finance and help you feel well-informed. Today, we're focusing on Cintas, specifically their upcoming earnings report. It's a company with a lot going on, and we want to help you understand what to look for and, importantly, why it matters. Before we jump in, if you haven't already, please subscribe, like, and maybe drop a comment. And hey, if there's a company you want us to look into next time, let us know in the comments below. Okay, let's get into it. We're talking about Cintas first quarter fiscal 2026 results. So this is for the quarter that just ended, August 31st, 2025.
That's right. And Cintas is expected to actually announce these Q1 results on September 25th, 2025. It's usually before the market opens, around 8 a.m. Eastern time.
Okay, September 25th.
But the thing to really watch is the conference call. They'll hold that same day at 10 a.m. Eastern. That's often where you get the real color commentary from management, their insights, how they answer questions that can move the needle just as much as the raw numbers.
Right. The call adds that crucial context. Now, Cintas has had some pretty strong momentum lately, hasn't it? What are some of the key things that happened over the last few months setting the stage for this report?
Yeah, they've been quite active, and it paints a picture of, consistent performance. If we look back, say, over the last 3 months, July, August, September, see a clear pattern. So back in July 2025, they reported their Q4 fiscal 2025 results, and they were strong. Really strong. They beat expectations pretty much across the board. Revenue came in at $2.67 billion.
Which was up, what, about 8%?
Exactly, 8% year over year. Net income was solid too, around $448 million. And importantly, management gave optimistic guidance for fiscal 2026. They projected revenue between $11 and $11.15 billion.
And an EPS.
Diluted EPS guidance was $4.71 to $4.85. But here's a big one. They announced a dividend increase.
Oh, okay. How much?
A 15.4% jump in the quarterly cash dividend, up to $0.45 per share.
Wow, over 15%. That's a pretty strong signal about cash flow and their confidence, right?
Absolutely. It reinforces their commitment to shareholder returns. It tells you management feels good about the cash the business is generating.
So that was July. What about August? Did the market like what it heard?
Oh, yeah. Moving into August, following that Q4 beat, you definitely saw the market react positively. Several analysts reiterated their ratings or even upgraded Cintas to a buy.
Reflecting confidence in the business.
Right. Confidence in the core business strength, the potential upside. Some analysts were targeting, 10-11% price appreciation from those levels. And because of those strong results and the dividend hikes, Cintas remained a favorite in institutional portfolios, especially ETFs and index funds. That passive buying provides ongoing support.
Makes sense. Stable choice. And then September, did the big money keep buying in?
It looks like it. In September, we saw reports of major institutional investors like Kester Investment Management actually increasing their holdings.
So continued conviction from the institutions.
Exactly. It signals they still believe in the fundamentals. And internally, Cintas Management kept up their share buyback program, which, reduces the share count, boosts per share metrics like EPS, and is another way to return capital to shareholders.
Okay, so consistent performance, dividend hikes, analyst upgrades, institutional buying. That sets a pretty positive backdrop. Now, one thing Cintas is known for is its consistency in beating earnings. That track record is quite remarkable, isn't it?
It really is something. They have an incredibly consistent history of beating analyst estimates. We're talking surprises on both EPS and revenue for the last 4 quarters straight.
4 quarters straight on both.
Yeah. And it's not just, good luck. It suggests their business model focused on essential services has a lot of predictability, almost like an annuity stream.
Makes them stand out, especially when the market's volatile.
Definitely. For example, in that Q4 FY25 report we mentioned, they beat the EPS estimate by $19. That's significant. And revenue beat by $40 million.
And the stock price reacted well.
Typically, yes. We saw positive reactions post-earnings. After that Q4 report, for instance, the stock jumped about 2.3%. The market tends to reward that kind of consistent delivery.
That's a powerful history. But, investing is always about looking forward. So beyond these Q1 earnings right in front of us, what are the key dates or potential catalysts coming up that could influence Cintas?
Right. Good question. Because while Q1 is the immediate focus, The context matters. And there's actually a pretty clear calendar of events to watch. Obviously, number one is this Q1 fiscal 2026 earnings announcement itself. Expected around, well, the announcement's September 25th, but maybe think early October for full digestion. That really sets the tone for the fiscal year.
Okay, Q1 first. What else?
Looking a bit further out, you've got the usual S&P 500 and ETF quarterly rebalancing. That happens around mid-November, say November 15th. That can drive flows into or out of the stock, affecting momentum.
CASA flows, right.
Exactly. Then, towards the end of the year, around December 20th, you'll have holiday sales data and various year-end reports. While not directly Cintas, they act as broader economic sentiment indicators, which can influence stocks like Cintas that serve businesses.
Got it. Macro sentiment.
Then, right around December 22nd, you get the major institutional holdings disclosures, the 13F filings, see who bought, who sold.
Always interesting to see what the big funds are doing.
And then, looking into next year, the Q2 fiscal 2026 earnings report, likely around January 17th, 2026.
Of all those, after Q1, which one feels most significant?
I'd probably point to the Q2 earnings in January. Q1, as we'll discuss, can sometimes be seasonally a bit lighter sequentially. So Q2 gives you a really solid look at how they're tracking against that full-year guidance and if the momentum is continuing into the new calendar year.
Okay, that makes sense. Q2 gives a clearer picture for the year. So let's zoom back in on the immediate event. Q1 earnings. What are the actual numbers the analysts are expecting? What's the consensus?
Okay, for Q1 FY26, the consensus expectation is for revenue of about $2.81 billion.
And year-over-year growth.
That would represent a 5.2% increase compared to Q1 last year. Yeah. Pretty healthy. For earnings, the non-GAAP EPS consensus stands at $4.15.
Okay, $4.15. And the growth there?
That's an 8.4% increase year over year.
Yeah.
So earnings growing faster than revenue, which implies some margin improvement.
Interesting. And you mentioned a whisper number.
Yeah, sometimes you hear chatter suggesting expectations might be slightly higher than the official consensus.
Yeah.
The whisper number floating around seems to be closer to $4.19 for EPS.
Suggests maybe some traders are betting on another beat.
Could be, yeah. A little bit of extra optimism baked in there.
And what about Cintas' own guidance? What did they say for the full year, and how does Q1 usually fit into that overall picture?
Right, so the company's full-year guidance for fiscal 2026, the one they issued back in July, they projected revenue between $11.05 billion and $11.25 billion, and diluted EPS between $16.80 and $17.10. Now, they did mention factoring in some modest workday headwinds, but they still expect gross margins to be stable in the high 40% range.
High 40s for gross margin is pretty strong.
It is. And it's worth noting, analysts have been nudging their ETS estimates slightly higher over the past week, month, and 3 months.
So a positive trend in revisions?
Yeah, suggests growing confidence leading into the report. Also, contextually, Q1 is often their lightest quarter sequentially, meaning compared to Q4. But it usually shows strong year-over-year growth, often due to things like annual contract renewals and price adjustments kicking in. So you need to look at both comparisons.
That's a really helpful point about the seasonality. Look at year-over-year, not just quarter-over-quarter for Q1.
Yeah.
Okay, beyond the headline revenue and EPS numbers, what should we really be watching? What are the key operational metrics that tell the underlying story?
Yeah, this is crucial, because the headline numbers are just part of it. For Cintas, gross margin is absolutely key. It tells you so much about their pricing power and their operational efficiency.
And what was it recently?
In Q4 of fiscal 25, it was 49.7%. That was up 50 basis points, half a percentage point year over year.
That's impressive. Getting close to 50%.
Exactly. Continued expansion, or even just stability at that high level, signals they're managing costs well and flexing their pricing muscle.
What drives that margin strength mainly? Pricing power or internal efficiencies?
It's likely a mix. They operate in a somewhat fragmented market, which helps with pricing. But they're also known for operational excellence, road density, things like that. Another critical metric is organic revenue growth.
Right, growth from the core business, excluding acquisitions.
Precisely. In Q4, that was 9.0% year over year. That's very strong and shows underlying demand is robust. You want to see that continue.
9% organic is solid.
Definitely. And then look at the segments. In Q4, uniform rental and supplies grew 8%, while first aid and safety grew 12% year over year.
So strength across the board, but maybe a bit more momentum in first aid safety.
Seems like it. And they're making moves there, too. They announced an expansion with a major hospital group for uniforms back in July, and they closed an acquisition of a regional first aid supplier in August. Both should help future growth.
Okay, strategic moves bolstering those segments.
And then, just stepping back, the macro environment matters. Resilient U.S. job growth, The ISM Services Index staying above 50, that's generally supportive.
Because more jobs and more business activity means more need for uniforms and facility services.
Exactly. It fuels their end market demand.
Okay, so we've got the hard data, the guidance, the key metrics. What about the softer stuff? Any interesting rumors or market chatter swirling around Cintas that might hint at future catalysts?
Yes, the rumor mill. There's always something buzzing around. One piece of chatter is about a potential acquisition, maybe in the safety services space, like they might buy a mid-sized player to broaden their offering or geographic reach.
Expanding that faster-growing segment.
Potentially. There's also speculation that Cintas is in talks, negotiating new multi-year contracts with several big Fortune 500 retail chains.
That could be significant, locking in long-term revenue.
Very significant if true. And then there are whispers about maybe accelerating dividend growth even further, given the strong cash flow.
Building on that 15% hike?
Possibly. And finally, some chatter about new tech investments. Maybe AI-driven stuff aimed at improving operational efficiency, cutting costs, and boosting those margins even more.
Interesting. Using tech for efficiency gains, lots of potential catalysts there, even if just rumors for now. So putting it all together, the track record, the guidance, the metrics, the rumors, and what's the overall feeling from analysts? And what are the stock charts telling us technically?
Overall, analyst sentiment is definitely leaning positive. You saw Morgan Stanley recently raise their price target from $625 up to $660. They cited the margin expansion and the steady contract wins.
$660 target.
Okay. And UBS also reiterated their buy rating. They specifically highlighted Cintas' pricing power, which we've talked about how resilient it is.
So analysts seem pretty constructive. What about the technical picture?
Technically, the stock's been in a nice uptrend for the last 3 months. It's up about 11% since the lows back in June.
Solid run-up into earnings.
Yeah. Support seems to be around the $600 level. Resistance is up near $648, which is very close to its 52-week high of $651.
So trading near its highs, what's the options market expecting?
Well, looking at the front week options, the implied volatility is around 32%. Basically, the options market is pricing in an expected move of about plus or minus $18 per share around the earnings release.
Which is roughly what percentage move?
About 2.8% in either direction. So the market isn't expecting a huge dramatic move, but still some volatility.
Okay, a moderate expected move. And short interest, many people betting against it.
Short interest is quite low, actually. That indicates there isn't a large pool of investors actively betting for the price to go down, often seen as a positive sign.
Limited bearish positioning. Got it. Okay, this has been incredibly thorough. Based on everything we've discussed, can we maybe map out a few potential scenarios for how this Q1 earnings report could play out?
Absolutely. Let's try to sketch out 3 main possibilities, considering the data and sentiment. We can even assign some rough probabilities.
Okay, let's hear them.
First, let's call it the bullish case. We put maybe a 30% probability on this. Here, Cintas significantly beats expectations. Maybe revenue comes in closer to $2.85 billion, and EPS hits around 4.25.
Well above consensus in the whisper number.
Right. If that happens, you can see the stock react positively, maybe a plus 4% to plus 6% move. This will likely be driven by organic growth, surprising to the upside, gross margins expanding further, maybe breaking above 50%, really strong growth in first aid and uniforms, and perhaps even a slight raise to the full-year guidance.
Okay, that's the strong upside scenario. What's the most likely outcome?
That would be our base case. We'll give this a higher probability, say 55%. In this scenario, Cintas basically meets or just slightly beats the consensus numbers. Revenue around $2.86 billion, EPS right around $4.15.
So in line with expectations, maybe a penny or two better on EPS.
Exactly. Solid, but no major fireworks. The stock reaction here would likely be more muted, maybe somewhere between -2% and +2%, just kind of reflects steady execution.
All right, steady as she goes. What's the downside risk? The bearish case.
Okay, the bearish case. We see this as less likely, maybe a 15% probability. This would involve a miss on expectations. Let's say revenue comes in below $2.77 billion and EPS falls short of $4.07.
It's a clear miss.
Yeah. In that situation, you could see the stock decline, perhaps in the -4% to -6% range. What could cause this? Maybe some softer U.S. economic data hitting new orders harder than expected, or maybe unexpected input cost inflation squeezing margins, or perhaps higher costs related to integrating that recent acquisition.
Okay, so potential triggers for a miss exist, but lower probability.
Right. Overall, the balance seems tilted towards a neutral to bullish outcome. Their track record is just so consistent. Healthy trends, strong margins. The consensus estimates already seem to reflect solid performance. So the bar is reasonably set, but maybe not excessively high. Of course, unexpected macro events are always a risk.
That's a really comprehensive look at Cintas and what to watch for in their upcoming Q1 earnings. Super helpful breakdown. It's clear there's a lot to monitor, from those core operational metrics like gross margin and organic growth to segment performance and how they navigate the broader economy.
And, what's really fascinating here is thinking about Cintas in the bigger picture. Here's a company providing absolutely essential services to businesses. They manage this strong organic growth, they make smart acquisitions, they have pricing power, but they exist within a broader economic environment. It really raises an interesting question for you to think about. Can this kind of operational excellence and market position continue to justify its premium valuation indefinitely? Or are there limits? Can it truly defy significant economic downturns, or just navigate them better than most? Something to definitely mull over as you watch the results come out.
That is a great question. How much can operational strength insulate a company like Cintas from the wider cycles? A key point for investors to consider long-term. Fantastic insights today, thank you. And a big thank you to you for tuning in to Investing Talk podcast. Remember to subscribe, like us, and please leave a comment, especially if there's a company you want us to analyze next. We'll catch you next time.